my working thesis now is you've seen me post in the past charts of the adoption of crypto. So we use active wallets. Now, we know they're double counted, but we're comparing it to the internet, which was IP addresses, which are also double counted. So it's fine, right? It gives you the rough rule of thumb. There's about 520 or 550 million wallets, active wallets out there. It's growing at twice the speed of the internet. So this is the fastest adoption of any asset class or technology the world has ever seen. Technology side's just been beaten by AI, just because Microsoft and other things can install it everywhere instantly. But it's massive because it is an asset and AI is not an asset. So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million, and what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like, and then on to 100 trillion, which is the size of most of the other asset classes like equities. In fact, most of them are larger than that. So that movement from 2.5 trillion to 10 trillion to 100 trillion is the trade. And that also happens to be the fastest, largest accumulation of wealth the world has ever seen.
Raoul Pal, the CEO of RealVision and trusted global macro investor, has shared his latest positive outlook on Bitcoin. Pal discussed the rapid hyperbitcoinization and growth of cryptocurrencies, comparing it to the early days of the internet. He notes that the number of active cryptocurrency wallets, which currently stands at about 520 to 550 million, is growing at twice the speed of internet adoption. These numbers provide a reliable estimate of adoption trends. Pal also emphasizes that adopting cryptocurrencies is the fastest for any asset class or technology. AI technology outpaces cryptocurrencies due to the latter's ability to be instantly deployed by large companies like Microsoft. However, he emphasizes that cryptocurrencies are unique because they represent an asset class, unlike AI. Pal predicts that the number of cryptocurrency users will reach 1 billion by the end of 2025 and could grow to 4 billion by 2030. And that's half of the world's population. This growth trajectory, according to him, also suggests a significant increase in the value of Bitcoin, projecting it to potentially reach $1 million a coin. We will now bring you more clips of Raoul Pal as he reveals why Bitcoin is the best asset class the world has ever seen. Give this video a like and subscribe to the channel to show your support. Thanks and enjoy.
Nobody's ever seen anything like this before. It's an equivalence to the entire baby boom generation entering into financialization, buying stocks and stuff like that, plus the opening of China to the WTO, plus the Iron Curtain coming down in Russia. It's of that magnitude of wealth generation in one short period. To put it in perspective, at $100 trillion, the S&P 500 has taken 100 years to accumulate $50 trillion of value. 100 years, and we will do it in less than 20. People lose the wood through the trees in this space, right? It's so easy to get caught up in the drama, the volatility, the down cycles that make everybody feel like shit, then the glory times. You forget what's actually happening. And, kind of in the end, every single, major crypto position you've ever sold, you regret when you look back. Because if you divide any asset by crypto, any single asset on earth, they all go down in price versus owning Bitcoin, or you choose your asset, right? And it's like, once you realize that, it's really difficult to get that out of your head. And so it, to me, became a realization over time from about 2020 onwards that there was no point doing anything else. Even though I'm a true macro guy and I used to do absolutely everything else, I now observe what the dollar's doing and stuff like that, but only within the context of where it's going with crypto. And many greats of the industry have gone down the same journey. Many of them were Global Macro Investor subscribers, Dan Tapiero, Mark Yusko, a whole bunch of these people, Alan Howard. They've all gone down this path of fuck it, there is no other asset that matters. This is the greatest macro opportunity of all time. So why even focus on anything else? It takes a while for people to get this. And what I keep trying to do is get people to say, okay, I love gold right now. Okay, great. Divide it by the Bitcoin chart. I love oil right now. Great. Divide it by the Bitcoin chart. And our job really is to maximize our returns. We're trying to look after our future selves here. So as an investor, you've got to take the optimal asset. Now, everything is correlated. Even crypto is part of the same cycle as technology stocks. Most equity markets, commodity markets are just lagging. It's all the same bloody cycle. So you don't need to choose one asset. Everything else is just suboptimal returns. I'll give you the specific example. So I bought Bitcoin at 200 in 2013. It went up to 1,000. Then it collapsed 87%. But I had a long-term time horizon. I'm like, fine, it's an option, whatever. I didn't put a huge position on, but it was decent enough. And I just didn't look at it for a while. I followed it, but I didn't worry about the P&L because it's like the bet goes on over time. It's an option. And eventually I sold out mistakenly in 2017 when things were starting to get crazy. I was up 10, 12x and it was 2,500. They had the Bitcoin forking wars. I didn't really understand what was going on. And I wanted to be clever, overly clever. So I took profits. I thought, I am clearly George Soros. I've just made a 10x and, wonderful. It went up another 10x in the next 6 months. I mean, people don't remember 2017. They're still scarred by the last cycle, but 2017 was wild what happened at the end of that cycle. So, it went from 2,000 to 20,000, then fell 85% again. And I didn't get back in until that sell-off after COVID. That was my signal, and I got back in. Traded well, bought the down 50% period, everything else, in it, locked and loaded, massively got a much bigger position than I did the first time around, and have been in ever since. I went back, and I should never have done this. I went back and said, I wonder if I just kept my original position and did nothing. I'd have done 5 times better. And then I thought, okay, what happens if I did what I was supposed to do, which was, let's say, double that original bet that wasn't so big that you couldn't do that. Just double that, just add that same amount in within 40% of the low. So you're giving yourself tons. I'm not saying, you're going to catch the low, but you got 40% wiggle room to somewhere get around the low. So that's dollar cost averaging around in a bear market. I'd have done 25 times better because that's compounding. And that was a stark lesson to me.
Raoul Pal continues his discussion by emphasizing the often overlooked potential of the cryptocurrency space. Pal believes it's easy to get distracted by the market's volatility and drama, leading to emotional highs and lows during different cycles. However, he explained that those who sell their major crypto positions often regret it in hindsight, as traditional assets generally decrease in value compared to holding Bitcoin or other significant cryptocurrencies. Pal reflects on his journey since 2020. He expressed that focusing solely on crypto has become more rewarding than his previous broader macroeconomic strategies. He observes traditional financial metrics and global indicators, but primarily within the context of their impact on crypto. He notes that many respected figures in the finance industry, such as Dan Tapiero, Mark Yusko, and Alan Howard, have similarly shifted their focus to cryptocurrencies, viewing it as the greatest macroeconomic opportunity ever. Here's more of Raoul Pal's positive outlook on Bitcoin and cryptocurrencies.
Decide what your time horizon is. It's the single most important thing. Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moorheads, the Wences Caceres, all of these guys, they didn't give a fuck. They just rode it and added into the down cycles, and they've compounded massive wealth. And there's many people who are not public who've done the same. But most people fear the downside more than thinking about its opportunity. Even though it never feels great, I was excited about it in 2022 because it meant I could add to my positions at great levels and compound. So then you get back to an all-time high much sooner than everybody else who's just done nothing. So that's really interesting. And so time horizon is super important. If you just don't want to deal with the downside because your psychology doesn't allow you to do it, that's fine. You need to really think that thing through. Now, what happens is people lose their fucking minds in a bull market and in a bear market. In a bear market, they get rid of all their tokens. They say, never again. This is the worst thing I've ever done. And in a bull market, they end up buying too much shit, stupid shit. And really, to not fuck up the movement from 2.5 trillion to 10 trillion to 100 trillion is to own the highest quality assets and do nothing. Now, we all have an inner degen somewhere within us. So allow yourself a bit of space to do that. You know, I've got positions in dog whiff, hat and bonk and, you know, you name it. But when I look back in my portfolio, it's probably 1%. But I look at it on the screen all day. I'm checking the whiff price all day. It's ridiculous. It's 1% because the rest is just a buy and hold long-term position. And then I see a lot of people trying to be overly cute by saying, oh, I'm going to own this underappreciated crypto like Cardano or XRP or whatever. Fine. But you're taking a risk that they're not going to appreciate the same as the proven assets. Now, the proven assets keep trending. If I look at the compound rate of growth, the annualized rate of growth, Bitcoin's 150%, ETH since 2012, ETH is 180, about 160, 70%, something like that, since 2015, 16. And that's per year. I mean, this is bananas returns. And then Solana's like 200. And that was a snapshot in February before. I mean, many of these aren't at all-time highs yet. So the returns from just owning the top assets is so good. Now, I also understand that a lot of people may only have 10 grand worth of savings. So they think, well, you know, even if Bitcoin goes to 1 million, that's a 14x. So I've got 140 grand. Can that even get me a deposit on a house? Is that a retirement saving? I get it. So people really want to take more risk, but just do it intelligently. And that's how not to fuck this up. Because if you turn your 10 grand into zero and you do it every crypto cycle, which many, many, many people did, you know, the NFT cycle destroyed a lot of people, and a lot of people got destroyed in just all of the kind of super early stage speculative stuff. We've all got wallets of shame. So it's not like any of us are any better. We all have the wallet of shame. And don't use leverage is the other one. That's the other thing that people tend to do is they love getting a yield. I don't see the point. So yields have risks. They come with a risk. Even staking yields, it often means if you're not liquid staking, you've locked it up. If it's liquid staking, there's the risk of the platform, of Lido or whoever else going under or something happening, right? Something unexpected. And in crypto, something unexpected always happens. Having leverage on a 70% volatility asset class is a very, very dangerous thing. Most likely, you will lose control of your coins. Your one job is not to lose control of your coins. That's why storage is super important. Your one job is not let go of your coins. Keep it for that 5 or 10 year bet, and your future self will thank you forever for doing it.
What are your thoughts on Raoul Pal's predictions growth of Bitcoin and cryptocurrencies? Have you experienced regrets about selling major crypto positions too early? We'd love to hear your stories. Share your thoughts in the comments section. If you found today's video informative and would like more insights and updates on cryptocurrency and global finance, please consider liking the video, subscribing to our channel, and enabling post notifications. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the crypto space. Until then, keep questioning, exploring, and most importantly, investing wisely. Thank you for watching, and we look forward to seeing you in the next video.